Unit 1. Calculating and reporting different taxes. In this section, the participants acquaint themselves with the theoretical framework of the tax system in the Republic of Cyprus and the way of calculating and reporting different taxes. After reading this unit, you will be able to become familiar with the concepts of corporation tax, personal income tax and value-added tax. Get to know the foundation institutes of the taxation system of the Republic of Cyprus. Introduction. Accounting tracks the business process and takes place in compliance with accounting standards by applying the legal regulations of a particular country. Below you will find more details on the issues of certain tax regulations in the Republic of Cyprus and their application in the system of accounting of entrepreneurs, through the following parts. The fundamental features of the Cyprus tax system. Corporation tax. Personal income tax. Special contribution for defense. Value-added tax. The fundamental features of the Cyprus tax system. Cyprus tax system is based on a system of direct and indirect taxation. Direct taxes are those that an individual pays personally or for which the employer pays directly on behalf of an employee. Taxes are calculated as a certain percentage of the profit or assets. Corporation tax, personal income tax and special contribution for defense, they are all direct taxes in Cyprus. Indirect taxes are those taxes where the tax burden of taxpayers through the price of a product or service is borne by the end user. The example of indirect tax in Cyprus is value-added tax, VAT. Taxes represent the revenue of the state budget and are established for the purpose of settling the public expenditure provided by the budget. Article 25 of the Cyprus Constitution requires citizens of Cyprus to pay taxes. Every person is bound to pay taxes, according to his means towards the public burden. Corporation tax. The underlying regulations governing the issue of corporation tax is the Income Tax Law, Law No. 118, of 2002, as amended, of Cyprus. Corporation tax, also known as company income tax or corporate tax, is a direct tax imposed on the chargeable income of a company. Chargeable income means the aggregate amount of the income after deducting of expenses allowed for tax purposes. For the purpose of taxation, Cyprus companies are divided into Cyprus tax resident companies and non-Cyprus tax resident companies. Cyprus tax resident companies will be taxed on their worldwide income received in Cyprus and abroad, while non-Cyprus tax resident companies will be taxed only on their income derived from Cyprus through their permanent establishment in Cyprus. The permanent establishment means a fixed place of business through which the business of an enterprise is wholly or partly carried on. Income tax law. The term permanent establishment includes especially a place of management, a branch, an office, a factory, a workshop, a mine, an oil or gas well, etc. In accordance with the general practice in Cyprus, the company considered being a tax resident of Cyprus if it is managed and controlled in Cyprus. There is no exact definition of the term management and control. However, there is a basic understanding of the requirement for management and control as majority of the directors of the company are Cyprus tax residents. General policy of the company is formed in Cyprus. Strategic decisions are taken in Cyprus by directors on the company's board meetings. Contract and agreements are signed in Cyprus by directors. Original accounting documents are held in Cyprus. Accounting of the company is done in Cyprus. Bank transactions are controlled from Cyprus. Corporation tax rate is set at 12.5%. In case of losses, the tax system in Cyprus provides that tax losses that cannot be offset against other income are carried forward to the next year. These losses will be offset against first available profit in the next 5 years. If during the next 5 years, the company did not manage to achieve any taxable income, then that losses will be lost. In other words, a company will not be able to roll them over to the 6th year. They will be written off by the end of the 5th year. In addition, tax losses cannot be carried forward if there was a change in the ownership of the company and company changed its main type of activity within 3 years period from the year of the loss. Tax period for companies or year of assessment means a period of 12 months commencing on the first day of January in each year. In other words, the tax period is a calendar year ending the 31st of December. Corporation tax is paid on a prepayment basis. The law provides that every Cyprus company has to file a temporary tax assessment with estimated annual taxable income for the current year till the 31st of July of the current year. Based on the estimated taxable amount, the estimated tax will be calculated and prepaid in 2 equal payments on the 31st of July and the 31st of December of the current year. If the temporary tax paid is lower than the actual tax of the year, then the difference should be settled until the 1st of August of the year following the tax year. Accounting profit calculated during the course of yearly accounting is usually different from taxable income. It relates to the difference between the principles of accounting standards and taxation system of the country. Corporation tax of 12.5% will be charged on taxable profit, chargeable income, of the company and not on its accounting results. Cyprus tax system provides for some types of income that are non-taxable fully or partly. Below stated some types of income that are fully exempted for tax purposes: tax-free income, profit from sale of securities, dividends, excluding dividends that are treated as tax-deductible by paying company, interest not arising from the ordinary activities of the company or closely related to ordinary activities of the company, foreign exchange gains realized and unrealized, profits of a permanent establishment abroad if more than 50% of the income of the pay abroad arrives from trading activities or the tax rate applicable overseas is not significantly lower than the tax rate applicable in Cyprus. All expenses incurred fully and exclusively for the purpose of the company's activities and are supported with adequate documentary evidence are allowed to be deducted from the income of the company for the purpose of calculating of chargeable income, taxable profit. Below some examples of tax-deductible expenses are described. Salaries of employees of the company and the relevant employer's contribution to the social insurance and approved funds of employees' salaries. Accounting and audit fees. Bad debts expense provided it is supported with adequate evidence like bankruptcy certificate, court order, etc. Expenditure for scientific research. Deemed deduction of 80% of the profit generated from licensing and/or disposal of intellectual property. Interest related to the acquisition of fixed assets used in the business. Expenditure on patents rights, royalties. Annual wear and tear allowances on fixed assets. Donations to approved charity funds. The income tax law also provides that there are some types of expenses that are not allowed to be deducted for tax purposes. Some examples of such expenses are presented below. Personal expenses of the director paid by the company. Salaries to employees if contributions to the relevant funds have not been paid in the year they are due. Taxes. Fines and penalties paid. General provision for doubtful debts. Expenses incurred for the acquisition of investments, like interest and legal fees. Expenses that are not incurred for the business of the company. Expenses that are not supported with relevant and adequate documentary evidence. 80% of losses generated from the use of intellectual property cannot be offset against other income or carried forward. Exchange losses realized and unrealized. Generally, the following rule applies to tax deductibility of expenses. If expenses relate to the type of income that is non-taxable under income tax law, like the profit from sale of securities, then such expenses cannot be tax deductible. It should be noted that any tax paid by the Cyprus company overseas can be deducted from the tax charges on the same type of income in Cyprus irrespective of the existence of a double taxation treaty. IV. Personal income tax. All Cyprus tax residents are taxed on their worldwide income, derived from Cyprus and from abroad. Non-Cyprus tax resident individuals are taxed only on their income derived from sources in Cyprus only in the case when they are physically present in Cyprus when providing their services. Cyprus tax resident individual means an individual who stays in Cyprus for more than 183 days in total in the year of assessment, 183-day rule. For the purpose of calculating the number of days in Cyprus, the day of departure from Cyprus considered to be the days outside of Cyprus. The day of arrival in Cyprus is considered to be the day in Cyprus. The arrival in Cyprus and departure from Cyprus on the same day is considered as day in Cyprus. The departure from Cyprus and return to Cyprus on the same day is considered as day outside of Cyprus. As from the 1st of January 2017, an individual can be treated as Cyprus tax resident if conditions of 60-day rule are satisfied. An individual stayed at least 60 days in Cyprus. An individual did not stay for more than 183 days in any other country. He/she is not a tax resident of another country. He/she exercises any business in Cyprus or is employed in Cyprus or is a director of a Cyprus tax resident company as at the 31st of December of the relevant year. He/she has a permanent residence in Cyprus, rented or owned. Cyprus tax resident individuals will be taxed on the following income. Income derived from Cyprus and abroad, on their worldwide income. Income from any office or employment. Dividends and interest. Pensions. Income as a result of a court decision or a will. Rent, royalties, remuneration arising from a property. Non-tax resident individuals are taxable of the following income. Income from a permanent establishment in Cyprus. Income from any office or employment in Cyprus. Pension received from past employment exercised in Cyprus. Rent from property located in Cyprus. Loss from trade within the current year and/or previous years for self-employed individuals. The following tables show the tax rates that are applicable to individuals in 2018. If an individual paid tax abroad on income that is subject to taxation in Cyprus, then this paid tax amount will be deducted from income tax on the same type of income charged in Cyprus, irrespective of the existence of a double taxation treaty. The income tax law provides that some types of income are non-taxable, like income from interest, unless falls within the main activity of an individual, income from dividends, profit from the sale of securities, lump sum payment on retirement, income from a scholarship or other educational endowments, etc. Remuneration received by individuals employed in Cyprus, who were not tax residents of Cyprus before that employment, are exempt from income tax on 20% of their remuneration or €8,550, whichever amount is lower. The exemption is applicable from the 1st of January of the year following the year of commencement of that employment. The exemption can be claimed only until the year 2020. Remuneration received by individuals employed in Cyprus, who were not tax residents of Cyprus before that employment, are exempt from income tax on 50% of their remuneration if such remuneration exceeds €100,000 annually. The exemption has restrictions. It will not be granted if an individual was tax resident in Cyprus during any 3 out of 5 years before the year of employment, as well as during the year before the year of employment. The exemption can be claimed for 10 years. The following expenses can be deducted from the income of individuals for purpose of calculation of their personal income tax amount. Contributions made to trade unions or professional bodies, including professional books. 20% of the rental income. Interest paid in respect of rented building. Donations to approved charities with receipts, etc. Employed individuals are paying their personal income tax under PAYE scheme, pay as you earn. Their employer will calculate the amount of tax and social insurance contributions that should be paid based on the annual salary of an employee. If annual salary of an employed individual exceeds €19,500, then he should submit his tax return electronically through Taxis.net system by 31st of July of the year following the current tax year. A self-employed individual has to file a temporary tax assessment with estimated annual taxable income for the current year till 31st of July of the current year. Based on the estimated taxable income, personal income tax will be calculated and paid in 2 equal payments on the 31st of July and the 31st of December of the current year. Any tax balance unpaid should be settled through self-assessment as follows. For taxable income less than €70,000, if a self-employed individual earns totally from trade, rents, dividends, interest received less than €70,000, then he should submit his tax return electronically by 30th of September through Taxis.net next year following the current tax year. However, the remaining tax should be paid by 30th of June. For taxable income more than €70,000, if a self-employed individual earns totally from trade, rents, dividends, interest received more than €70,000, then he should submit his income tax return electronically through Taxis.net by 31st of March of the second year following the current tax year. This return should be accompanied with audited financial statements prepared for such self-employed individual. However, the remaining tax should be paid by 1st of August of the year following the current tax year. V. Special contribution for defense. Special Defense Contribution was introduced in 1984 with the purpose to collect additional funds for military service in Cyprus. The legal framework for Special Defense Contribution set in the Special Contribution for the Defense of the Republic Law No. 117/I of 2002. It provides that special contribution for the defense is imposed on dividends, passive interest income and rental income received by Cyprus companies and individuals being both Cyprus tax residents. Non-tax residents in Cyprus are exempt from the special contribution for the defense. An individual is considered Cyprus tax resident for SDC purposes if 183-day rule or 60-day rule is satisfied, and also he has domicile of origin in Cyprus, or if an individual was Cyprus tax resident for at least 17 of the last 20 years before current tax year. The following table shows the tax rates of SDC that apply in 2018 to Cyprus tax resident individuals. The following table shows the tax rates of SDC that apply in 2018 for Cyprus tax resident companies. SDC on rent is paid by the tenant, if the tenant is a company, partnership or state. In such a case, SDC is withheld at source and should be paid by the end of the month following the month of payment. If the tenant is an individual, then the landlord will pay SDC on rental income twice a year on 30th of June and 31st of December. SDC on interest and dividend income received by a Cyprus tax resident will be withheld at source and paid by the end of the month following the month of payment. If a Cyprus tax resident receives dividends, income, rental income from abroad, then SDC on this income will be paid twice a year by 30th of June and 31st of December. VI. Value-added tax. The main law that regulates value-added tax in Cyprus is the VAT Law No. 95/I, 2000. In general, VAT is an indirect tax that applies to all commercial activities including production and distribution of goods and rendering of services. There are several exempt supplies that are free from VAT charge, and they are described below. VAT is an indirect tax because it is collected by the seller but is paid by the customer. Value-added tax or VAT is imposed on provision of goods and services in Cyprus, importation of goods into Cyprus from third countries, acquisition of goods from the European Union. One of the reasons of existence of the VAT is to maintain fair trade. When goods are sold for export or services provided to the overseas customer, then normally VAT will not be charged, but VAT will be charged on imports in order to maintain fair trade condition for local companies so they can compete with overseas companies on equal terms on their local market. VAT basically is a percentage of the selling price of goods or services that is added to that selling price. Therefore, customers usually pay to the supplier manufacturer the selling price he is charging them plus the additional percentage of the selling price being VAT. So the VAT burden is borne by the final consumers, and not by the selling company. In other words, VAT is an indirect tax. The selling company will collect this received VAT and will transfer it to the VAT authorities. However, a selling company is allowed to deduct VAT it paid on acquired goods and services necessary for the production of goods or services sold. Therefore, double taxation is avoided and tax is paid only profit margin that selling company charged over and above of their costs. A taxable person under VAT is usually a company or individual that is registered or is required to be registered for VAT purpose under VAT law and carries out business activities. Registered person is any person or company who has been registered by the VAT Commission or in the VAT register. Being VAT registered persons, they are responsible to charge, collect and pay VAT to the tax authority supporting this payment with the relevant VAT declaration. Employees are not taxable persons for VAT. A taxable person will charge VAT on their sales of goods or services. This VAT charge is named output VAT. For the production of goods or services that taxable person bought particular good and service, the price he paid included VAT charged by the supplier. This VAT is named input VAT. The VAT law provides that the VAT liability is calculated as output VAT less input VAT, and this will be the amount that taxable person will pay to the tax authorities. VAT payable equals output VAT, Input VAT. If the input VAT exceeds output VAT, then the difference is carried forward as a credit and will be offset with the future, next period, VAT liability amount. VAT registration is compulsory when, at the end of any month, the value of taxable supply exceeds €15,600 during the prior 12 months period. At any time there are reasonable grounds for believing that the value of taxable supply will exceed €15,600 limit in the following 30 days. Resident of European Union member state other than Cyprus sales goods to non-VAT registered person in Cyprus for an amount exceeding €35,000, then that European Union member state resident should proceed with the VAT registration in Cyprus. Any person or company acquires goods from suppliers residents of other European Union member states for an amount exceeding €10,250. Any person or company provides services to a VAT-registered person within the European Union. Any person or company receives services from overseas for the amount exceeding €15,600 for any consecutive 12 months, then VAT should be accounted under reverse charge principle. VAT law provides as well for voluntarily VAT registration even if taxable supply is lower than €15,600. In order to register for VAT and receive VAT number, it is necessary to complete and submit VAT registration form and support it with the relevant documents. After successful registration, VAT authority will grant person or company with the VAT number and issue a VAT registration certificate. In this certificate, VAT authorities will establish VAT periods of the company or person. It is possible that the first VAT period will be more than 3 months, but all the other periods will be equal to 3 months periods. VAT return should be submitted and relevant VAT liability should be paid within 40 days from the end of each VAT quarter period. All VAT returns should be submitted electronically through the TaxisNet system. The following VAT rates apply in 2018. 0%, 5%, 9%, 19%. Example of goods and services that will be charged with 0% VAT. Exports. International air and sea transportation of persons. Supply of goods to other European Union member states. Ship management services. Example of goods and services that will be charged with 5% VAT. Animal feeding stuff. Services of road cleaning, recycling. Funeral services and supply of coffins. Services of authors, composers, artists and critics of work of art. Supply of seeds. Newspapers, magazines and books. Bottled and non-bottled water, drinks and juices excluding soft drinks and alcohol. Ice creams and similar products. Dry nuts, potato crisps, cheese puffs, cereal. Entry fees to theaters, circuses, festivals, concerts, museums, zoos, cinemas, sport events. Supplies of pharmaceutical products and vaccines that are used for health care. Confectionery items, chocolate and biscuits partly or wholly covered with chocolate. Example of goods and services that will be charged with 9% VAT. Taxi services. Tourist, excursions and long-distance bus services. Hotel accommodation services. Restaurant services and other catering services including alcoholic and soft drinks. Air and sea transportation within Cyprus. All other supply of goods and rendering as services except the taxed at 0%, 5% and 9% VAT or exempt from VAT will be charged with 19% VAT. Example of goods and services that are exempt from VAT. Rent of immovable property for residential purposes. Hospital and medical services. Insurance and financial services. Educational services. Postal services. Lottery tickets and betting coupon for football and horse racing. It is necessary to mention the difference between 0% VAT and exemption. If business only make exempt supply, then it is not entitled to register for VAT and cannot claim VAT input on purchases, expenses or imports. On the other hand, if business makes 0% VAT supply, then VAT input on purchases, expenses or imports can be claimed for refund. The Cyprus tax system has a number of advantages that will be interesting to potential investors, like tax-free income, low rate of corporation tax, over 50 signed double tax treaty agreements,